morning and welcome to this week's Market Carver. Hope you've had an outstanding week enjoying this wonderful weather that we've had as of recent. It's not been wonderful weather for the healthcare and the biotechnology sector. As you know, we reported in the Market Carver probably 6 weeks ago. We began to trim healthcare out of the portfolios, a long-term holding that we'd had. Seasonality had changed and we started to see some deterioration, and boy is that the case. Recently, you've had both Eli Lilly CEO as well as Roche's CEO essentially come out and say, hey, we're in a bubble at this point in time in the biotechnology world and we're going to slow our mergers and acquisitions down. We've also seen a kind of a changing of the guard in the biotech world. When you look at the big companies like Biogen, for instance, they tended to take about 75% of their capital and reinvest it back into their business. Well, as the businesses have kind of matured a little bit, the last 5 years, you've watched them spend closer to 55% of their money on nothing other than financial engineering. Big changes, big differences, and one of the reasons why we took some profits off the table and reduced those holdings, especially when there was no capital gain exposure that we had to worry about. Well, the Federal Reserve did meet, and they did absolutely nothing. I was wrong, in all fairness. I thought that they were not going to raise rates, but that Janet Yellen would say something very hawkish, meaning implying that she was going to raise rates on down the future, and instead it went the other way. She didn't raise rates and became much more dovish than she probably was even before. In fact, they added a new sentence inside of the message that said, due to the global slowdown, i.e. China, things that we've been talking about. Very, very interesting day. We took advantage of the day and moved some money from the floating rate notes to some 2-year notes that had their best day that day since back in 2009. Very, very interesting part of the bond market world going on right now. Well, speaking of the bond market and what's going on, this chart you're going to see on your screen right now will show you that our stock market is now actually smaller than our bond market. We have about $39 trillion inside of bonds, about $26.3 trillion inside of the U.S. stock market. The bond market is growing and growing. Now, we watch this all the time. It's interesting to note, by the way, the Federal Reserve owns about 10% of all of those bonds, but that's another story for another time. What is interesting is over the past few years, we've gone from 9% of the bonds being held inside of mutual funds and exchange-traded funds up to 17%. In other words, people are finally catching on, something that we've preached a lot in here. If you're going to maintain the liquidity, you would really rather be in an ETF than you would owning the individual bond, where there's very difficult times getting a secondary market many times. CPI numbers came out, the consumer inflation index, if you will, consumer price index, up 1.8% year over year. Now, I want you to understand that is totally an academic number. It matters to you if you're on Social Security because the government will use part of that data to determine what the raise should be year over year. But here's the challenge. Here's the problem. The CPI is made up of both goods and services. And I actually wrote a column about this for the paper a couple weeks ago. You can find that on our website under FEG Insights if you want to go read it. But the reality is, as an individual, your life is different than the CPI. As we've been talking about with demographics forever, as you get older, you have more and more of your stuff that needs to be service-driven as opposed to goods. So, as I discussed in the article, if we look at a TV, for instance, going back to 2010, the price is actually 58% cheaper. However, the price of cable is 13% higher. So when you look at the goods versus services, more of your life tends to be service-driven the older we get. And sadly enough, we are experiencing a lot more inflation than the 1.8% that you're seeing on your screen. Regardless, I hope you're having a wonderful day, that things are working well. If you've got any questions or comments, we're more than happy to sit down and have a cup of coffee with you. If you're out and about on Saturday, don't forget to catch the radio show, 9 to 10 on WQME, 10 to 11 on Shine 99 Sunday mornings, and of course Thursday afternoon, 4 to 5 on WILO. Have a wonderful day. God bless. We'll see you again soon.